As you know, I posted the full conference call with Voxtur, and in this video, I'm going to give you my thoughts. So I'm going to talk about, why I'm disappointed. I'm going to talk about why I'm not worried, and you see, investing is hard because people can't control their emotions, right? They can't control their emotions because at the end of the day, you can only do four things. You can buy, you can hold, you can sell, or you can trolling. Like some people choose to troll. But even the trolls today, they're pretty much too tired to troll. And a lot of people just completely left. They're exhausted. So first thing, let's talk about what I'm disappointed with, what seems disappointing. So in the financials, if you look at individual quarters, because they didn't break it down into individual quarters, they broke it down into the management discussion. So for the continuing operations, which is after they sold the AMC appraisal management business, Q3 had revenues or 12.2 million, and then the most recent Q4 that they reported revenue of 9.9, right? So that's a decline of 20%. And I think last time Gary said something that Q4 should be very similar to Q3, or 20% decline is not similar, right? And then if I put it into my spreadsheet with more numbers, again, this is a 20% decline. And then also the gross profit margin went from 67 to 61.4%. I mean, 61.4 is fantastic, but it is down from Q3. And then the EBITDA for Q3 was almost positive, right? It was like negative 800, and then it got worse in Q4, almost negative 4 million. So if you listen to this piece about Jim Albertelli's business.
Jim Albertelli, our former CEO, is now back to the law firm, and we're not, getting the referrals that we used to get from him. In fact, negligible today. It hasn't had any impact. In fact, our profit and gross margins have increased with our title business because of it. And so we're now, somewhat independent from that business that was there previously with Albertelli Law.
As you can see, Jim Albertelli is not providing them business anymore, okay? And this business was not profitable business, so you really don't want that kind of business. But that business, according to my conversation with them, it was about 1 million per quarter, right? So adjusting for that, instead of 10 million of revenues, we would be at like 11. So 12 versus 11. And then there's another piece that if you want to find out, you better call Gary and maybe you can discuss that. But I'm not going to discuss it here or disclose it here. The bottom line is that the core business pretty much was flat from Q3 to Q4, even though it shows a decline. Now, that still doesn't make it profitable, but the point is that it was pretty much flat. Now, the next point that I want to make is why I'm not concerned is because really we have, again, you can only do four things. You can buy, you can hold, you can sell, or you can troll, okay? And there's only I choose to hold. I'm not buying more, I choose to hold. Why do I choose to hold? Well, because there's really three scenarios that are going to happen here. Like, even though some people want to think that there's a fourth scenario, that there is a bankruptcy, that scenario is out of question. And listen to this.
Recently, amendments to the company's credit agreement were executed, which amendments waive breaches of covenants that existed prior to the date of the amendment and establish revised covenants.
Also, we have recently executed an amendment to our credit agreement with the Bank of Montreal. The amendment waives all previous breaches that existed prior to the date of this amendment and establishes revised covenants. As previously mentioned, we have a great partnership with the Bank of Montreal, and this is a clear indication of their commitment to Voxtur and allowing us to achieve future success.
As you can see, the bank is working with them. They're always adjusting things because the bank knows that the bank is going to get paid back. And the total amount of debt that they have is, like, in US dollars, $27.5 million. We're not talking 500 million. We're not talking $1 billion. We're talking about 27.5 million, okay? Which brings me to scenario number one. What could happen? Well, let's say they're like, we're tired of running this. We are going to sell individual pieces. We're going to sell. We're going to pay off debt, and we're going to pay out the rest to shareholders. In this scenario, you would get more money than what the market cap is today. So why would I worry? And during the conference call, I asked specifically this question because some people cannot see past, they have blinkers on. They cannot see past, oh my God, the numbers for the quarter look bad. They're not profitable yet. They cannot see past that. Individual businesses that Voxtur has are valuable and useful for others as ingredients to make their business better or make something strategic for them. So I specifically asked this question about why are your businesses valuable to others? And here's what Gary answered. Are you getting any interest in, some of your business, parts of your businesses, or even the entire company? And if so, why would anybody, what kind of benefit do you bring to others that might express interest in your businesses?
And there's substantive interest in a lot of our businesses right now because, while it's not apparent in our results today, there's many things that we have. No one on this planet matches Blue Water with the technology that they have. The ability to access trades, bulk deals, flow, post and pre-close due diligence. With the platform that Al has developed, nobody on the planet offers that. With Jeff Young and the taxation thing, no one has real property tax analytics. No one has today an ability to review every property right now in Canada, or in Ontario specifically, and basically come up with predictive analytics on whether property assessments and therefore taxes are too high and too low, and by how much. It's a very proprietary technology. It's based on 40 years of assessment case law in Ontario, and it's of significant demand, not only by the province, but by all of the municipalities. Many people would love to be able to get their hands on that and own that. The same thing goes with sketches. Right now, we're in material discussions with a large insurance adjuster that would absolutely love the Apex and floor plan layout technology. And so to be able to sell or license, license that technology, not just to the valuation industry like Fannie and Freddie and all of the AMCs that need it, but also cross paths and move into the insurance industry is very formidable for us, and many people would love that technology. The data business that Venutech has, and the evolution of Title Toolbox and Repo Gateway is of significant demand. We're currently providing these platforms to all of the major title agencies right now. And so, clearly, we're one step ahead of the marketplace. So when I look at everything we're doing, with Marty Haldane and what they've done with building Appraisal Direct, which is basically bypassing AMCs and going directly by using appraisal panels that we have, basically created ourselves. There's significant savings and and not only savings, but an opportunity to do things more affordable, more quickly, more accurate. And so certainly we're exploring ideas to even sell that technology to AMCs so that they can use it and, and participate in this without not having anything at all. And so I can tell you that there's a significant demand, for our businesses, each and every one of them. I guess the long-winded answer is that our businesses are in big demand. We have unique service offerings that many of our competitors do not have.
As you can hear, there's big demand for those businesses from the point of view of getting them sold or acquired. And again, if you don't believe this, you have 4 choices. You can buy, hold, sell, or troll. That's it. No more emotional stuff, blah, blah, blah. These are the only 4 choices that you have, right? So Blue Water could be liquidated, could be sold. The tax business could be sold. Sketch business could be sold. Benutech business could be sold. Remember, Benutech has access to data that only 2 companies have access to this. Benutech got access to this data through a lawsuit. Another company has access to this data. These are only 2 companies that have access to this data. Benutech could be sold. And then even if Benutech were to be sold, Voxtur can license back this data. But this data is very valuable. ANOW could be sold to AMC companies that want to go offer something else to not go out of existence. So all these separate businesses could be sold for way more than the debt and way more than the market cap. Scenario number 2 could be they could sell individual business, right? Any of the 4 that I listed could be sold, right? To pay down debt or completely pay debt. Parts of those businesses that I listed in scenario could be sold to a strategic. Debt would be paid down significantly or some, and then they stay in business. You mentioned many times your goal is to significantly reduce the debt, whether it's through sale of some of the non-strategic business units or assets, or maybe you have a choice that you could, sell part of a business to a strategic.
And so what we have to do is we want to be true to the shareholders because we think we're going to be significantly profitable in the future, is that trying to, subtract some of the non-strategic, non-technology assets so that we can reduce our debt, or potentially to partner someday with a very strategic investor where by virtue of we have to give up a piece of the business, the overall profitability will be more than what we're getting now by virtue of that strategic investment. So we'll continue to look at areas to augment our balance sheet, reduce the debt by finding strategic partners.
And then also, Gary talked about gross profit margins, where he's shooting for them to be. Right now, they are, as of this quarter, 61.5%. They were at 67% in Q3. He's shooting for 70%.
And, our hope is that by the end of this year, we'll be definitely in the 70s as far as gross profit margins. And now we have to wait for the technology pieces that we've, banked on to catch up. And it will catch up, but it never can be quick enough.
Those are incredible gross profit margin. Remember in a previous video, I showed you how Matterport was bought for $1.5 billion. You know where their gross profit margin was? In their 40s. And now we have a business that has a gross profit margin of more than 60%. That is very valuable. I mean, look at this. even in a horrible, horrible real estate market. What is the gross profit margin for the entire year? 31 divided by 48, about 65% gross profit margin. Don't you think somebody would be very interested, which brings me to another scenario. Could somebody be very interested to buy this company with amazing technologies and already get gross profit of 31 million? And they could completely wipe out the general and administrative because they have their own infrastructure already, right? So how much would you pay for a company that can add to your growth profile 31 million of gross profit, and you get all these technologies that are disruptive? Would a title company be interested in getting AOL? Why not, right? So it's just an example. This is what you have, is a company that in a horrible year generated 65% of gross profit margin. Now, but I'm still on scenario number 2, to stay and go towards profitability, reduce the debt. When they sold the AMC business, this is the benefit.
Utilizing proceeds from the sale of the appraisal management business, the company paid down approximately $23 million on principal of its credit facilities. From an ongoing cash flow perspective, this debt reduction will provide annual principal and interest savings of approximately $8.2 million.
The advent of these interest rates increase, it's virtually doubled our cost of debt. And so, as Robin mentioned in the outset, I mean, $8.5 million is what we were paying in interest and principal on our valuation business that we sold. We were probably averaging in the neighborhood of between 4 and 4.5 million of profit.
As you can see, 8.5 million of savings from the debt is going to be achieved now that the debt has been reduced, and then that business only generated about 4 to 5 million of profit. So save 8.5, but lose 4 to 5 million of profit. That's what they've done. And as they keep talking, debt will be reduced more.
We have several other initiatives going on to reduce their credit facilities further and hope to be able to update you with these details in the very near future.
And until then, Bank of Montreal keeps working with them. They're not pushing them to bankruptcy.
Recently, amendments to the company's credit agreement were executed, which amendments waive breaches of covenants that existed prior to the date of the amendment and establish revised covenants.
Now, unfortunately, Q1 is not going to be profitable. In the last quarter, he talked about how Q1 can be profitable if Blue Water's certain clients close. And as you can hear in this following sentence from Gary, those closing transactions have been moved to another quarter. So you just talked about Q1 and the timing of transactions on Blue Water. Last call, you mentioned that the timing of these things might make the quarter cash flow positive. So are you saying that the timing of these things was moved to Q2?
I guess I'm not saying it. I am more than saying it. No, we didn't get things across the line that we hoped.
Now, once something happens, whether sell of one business, sell of part of a business, and the debt is completely reduced, and the title business and tax business and Blue Water take off, like he's saying here.
On the tax side, we're still working very, very closely with the province of Ontario to institute our PTA, and we are fully confident that that will generate significant revenue with very high profit margins this year. And we're hoping before the end of the second quarter that will be implemented. Again, when you're dealing with the provincial government, time is something you have to have patience for, because their time and our time are not always commensurate with each other. But we have a bunch of meetings today, and we believe that platform will be introduced, and hopefully in the second quarter, and that's going to mean significant bottom line and top line revenue for us. And our title business, I guess I should address that. We're continuing to develop a full technology platform for a fully digitized loan officer. Right now, our pre-docs are out and selling. Our technology now is completed for our starter kits. And so Jim Adams and Ryan Marshall are working diligently to move forward with that platform, and we expect very significant improvements over the next 10 months of this year, 9 months of this year, whatever is left. But we're very optimistic about that.
What do you think is going to happen to the stock price when they have no debt or very little debt, and those businesses are starting to take off? So that's scenario number 2. Scenario number 1 was, if we sell all the pieces, I get more than what the stock is. Scenario number 2, they eliminate debt by selling part or all of their individual units, and then the business units start growing, and then they become profitable. That's scenario number 2. Scenario number 3 is they merge with another company, right? Strategically. Again, it's another way of taking those individual businesses and make them useful for the other company that might have clientele. And then those two companies combined would be more powerful, right? This company might have clientele or wants to get into a particular geography or business line or whatever, and this company has the technology that they don't have, right? So that would be scenario number 3. And scenario number 4 would be a complete outright sale, because scenario number 3, a merger, would be you could still maintain your shares in the combined entity, whether the combined entity stays Voxtur or whether your shares in Voxtur get converted into the new entity, and you can stay on for the value creation as a whole, right? And where scenario number 4 would be that they sell the entire company and you simply get paid in cash, right? And it would most likely be at a much, much higher price than what the current market cap is. Because if they would get an offer that's much higher than all the other scenarios, then they could go with it. But I have a situation where scenario number 1, scenario number 2, scenario number 3, scenario number 4 appears to be offering me more than what the current market price is, and then scenario number bankruptcy is pretty much out of the cards, then at this price, it's a no-brainer to me to hold. But if you think that, I don't like current numbers, and then you can sell. Again, 4 things you can do. You can buy, sell, hold, or troll. That's it.